Hey guys, Jason here with Insurance and Estates, serving as your wealth transfer specialist. So today let's talk a little bit about this massive transfer of wealth that we're going to see here over the next probably 15 to 20 years. And what I mean by that is as all of these baby boomers continue to age and as more and more employers have moved away from the defined benefit plan of pensions and moved more towards the defined contribution plans of 401ks, we're going to see a massive amount of 401k IRA, traditional IRA money that is going to be transferred to the next generation as husband and wives and spouses begin to start passing away as our baby boomers begin to age. So in the past, that used to really not be that big of an issue because we had the ability to use what we call stretch IRA provisions and literally stretch that IRA down to the next generation and to the next generation, not only to the kids, but also to the grandkids, and just continue to take small distributions from that qualified money and allow these assets to be stretched for multiple generations. And that was something that we used a lot of life insurance for because sometimes we would skip the kids and stretch that money to the grandkids, and then we would use life insurance to make the kids whole. So a lot of that very, very strategic planning went away beginning back here in 2019 when Congress passed the Secure Act. So really, what is the Secure Act? And maybe you haven't heard of it, but if you have older parents and if you are in line to start inheriting some money, especially qualified accounts, you're going to learn very quickly what the Secure Act is. So this was a piece of legislation that Congress passed back in 2019. There were several things that made up the Secure Act. You know, as you can see with this flyer here from Prudential, it was really done to encourage more businesses to offer retirement plans to their employees and encouraged employees to save more for retirement. They did that by increasing some tax credits for small businesses. They changed the starting date for required minimum distributions away from 70.5 to now starting. It started in 2023. Actually, you don't have to start taking an RMD, a required minimum distribution, until age 73. And beginning in the year 2033, that moves all the way up to age 75. So they did some other things, but if you look here on this flyer, the biggest and what I think probably one of the largest changes that were made that a lot of people aren't talking about, but you're going to experience, is they modified the stretch IRA rules. So if you look at this and see, it says that the Secure Act requires beneficiaries to completely withdraw inherited IRAs and retirement plans within 10 years and pay the resulting tax liability. So think about that for a second. Maybe you're in your 60s, maybe 70s, and you've enjoyed a nice inheritance. Maybe your parents left you a 401k, an IRA, something, and you've been responsible and you've been taking just the required minimum distribution based off of your life expectancy. And by doing that, you're probably now been able to stretch that IRA for many years and have basically helped create a pension for you in retirement where you have this money coming in. But what this Secure Act is saying here is that Congress is tired of waiting on tax money. And they want all of this money to be liquidated now within 10 years and pay the resulting tax liability. So as we look at the baby boomers and as we look at this massive trillions and trillions of dollars of wealth creation, of wealth that's going to be transferred from our parents to us, maybe our grandparents, to some of our parents, there's just going to be this massive tax liability that's sitting there waiting, and Congress is just waiting to get a hold of all of this money. So there are some ways that we can strategize around this. Maybe we place some type of a life insurance policy in place so that we have a large bucket of tax-free money sitting on the sidelines to pay that very enormous tax bill that's going to happen one day. Maybe we do life insurance policy to pay for the taxes for a Roth IRA conversion. So maybe if we had a life insurance policy on our parents, and when they passed away, we get $200,000, $500,000 income tax free, whatever the number is. And then at that time, we liquidate the inherited IRA that we're going to receive, but we do so as a Roth IRA conversion, turn all of that money over to tax-free wealth for us, and we have a life insurance policy sitting on the sidelines, just ready to go into the game, just ready to work for you to handle any situation that we have with this huge transfer of wealth. So guys, as you learn more about this, and as you're dealing with your parents and as they age, you need to be aware of these changes. You need to be aware of what type of tax liabilities you're going to have when this money rolls down to you one day as an inherited IRA, and what are you going to do with it? What's the best way to maximize those funds? And can we use strategies like life insurance to put new assets in place to help handle the financial burden of taxes that you're going to have? That's the type of planning that we do here at Insurance and Estates. This type of planning is something I've been doing for 16 years. Absolutely love doing it. Absolutely love helping you find ways to maximize that transfer to the next generation. If you're facing something like this, if you know you're going to have a very, very large qualified pre-tax asset and you know you're not going to spend all that money in retirement, reach out to us. Reach out to me here at Jason at InsuranceandEstates.com. Jason at InsuranceandEstates.com. And let's just have a conversation. Let's see if we can come up with some ideas to put some plans in place so that we can maximize what you give to the next generation and minimize what you will have to give to the government. Guys, I really hope you appreciate and like these videos. Really enjoy making them for you. Look forward to doing several more. We will see you here soon. Take care.